No. We'll explain why I'm not going to touch this kid's hand here. Let me get settled in here, Josh. Let me get my distance from you. Brian, can you get in the hazmat suit, please, for me? I'd really appreciate that.
Welcome to Java with Josh, a November edition. And what Dave is referring to is how I sound beautiful right now. I sound lovely. I actually feel way better than I did, but I am a disgusting sinus-infected mess. So I apologize to everyone here. I thought I was on the road to recovery. In fact, last week I was feeling pretty good. And then I took my daughter. Are you okay?
I'm good. I'm just, I got big legs. I'm kind of
Good
like bumping into stuff.
gosh, this table is huge, and you are going to take it out.
I'm sorry.
But last weekend, I took my daughter Maggie to a princess camp out, and there was 450 dads and daughters in a YMCA camp in Indiana. And it was a great weekend. It's a great time with your daughter. It's a fun thing to see her get some freedom and some different things like that. But it's not conducive to dads sleeping.
Yeah.
A, because their daughters are sugared up and not wanting to listen, and B, because the other dads are snoring up the wazoo. I'm sure I wasn't at all.
No.
But that recovering cold went from recovering to full-blown sinus infection. So I apologize. I sound lovely, but I actually feel okay.
Yeah, we have different definitions of great. It sounds like a miserable time for me. So you, Josh, your microphone, it's fuzzy. It's rubbing up against your sweater, I think. No, yeah, it was distracting. And since your voice sounds at its peak performance.
You want to make sure that I don't sound that awful?
Yeah, we don't want people to turn on the show off because of your fuzzy mic thing.
Yeah.
So, man, I can't get further away from you if I wanted to.
The doctor tells me I'm not contagious anymore.
No, I know, but you're also trying to play footsies with me here under the table.
It's true.
Very inappropriate.
So, well, Dave, we've done it again. We've come back for another month, and I'm excited for this month. I feel like sometimes I've been Debbie Downer, Mr. Pessimist this year, and I'm not going to be today. I think we got some fun. We've got some fun stuff to talk about.
Yeah.
Hey, Clay's watching out there today.
Clay money.
Clay helped us with our setup here, so it's fun to see that come in there.
I don't know why I say Clay money. I've never called him that before in my life.
You barely know him, actually.
Yeah, no.
That's kind of weird.
Sorry, Clayton Smith.
But
carry on.
So that's my story here. In fact, today Dave likes to support local coffee shops, and I just like to drink out of the coffee maker here.
Yeah.
But Brian, our lovely compliance guy, also our health guru here in the office, has turned me on to the Starbucks medicine bomb, or what is it? Medicine ball, medicine something. But it's a different teas and honeys and things like that mixed together, and it actually soothes the throat immensely. It's fantastic. So if you ever have a little cough, I'd get the Starbucks medicine ball. You just have to ask for it there. They know what you're talking about, and it's delicious. So.
And me, I got the obligatory peppermint mocha with oat milk because
you're difficult.
Let's do our cheers. Just not touch like your saliva part.
You're crazy.
Okay. Appreciate it. I'm kind of lost in our little agenda here. Where are we?
We're going to start with compliance. Can you put me to the compliance slide up here? Because we've just talked about me being sick for 5 minutes, but let's talk about the important part here. What we're about to talk about today is just informational only. This is not advice. Advice means it applies to your specific situation, and this is general overall knowledge. So if you want advice, we'd be happy to give it to you, but please reach out to us one-on-one for advice. So,
cool. Thanks for that. Oh, I'm sorry. It is Sea-Dog.
Sea-Dog. Yeah. Thanks, Clay.
Clayton, do you hear that fuzzy microphone? Any last-minute tips you have for us? That'd be great, but I think it's just a sweater. So, all right, cool. Moving on here. So what are we doing here today, Josh? This is called Java with Josh. Am I correct?
This is Java with Josh. This is your brainchild.
Yeah. So Java with Josh, just as a friendly reminder to everybody, we hear you. We hear you loud and clear that you want more Josh and more Dave. And a way that we're delivering on that request.
Not everyone wants more Dave.
Oh, well, did you? Oh, I thought I said that subconsciously. Yeah. So we decided to come up with this monthly live video show that we stream to YouTube, Facebook, and our website. Java with Josh is a timely, 15 to 20-minute market update. Josh and his advisors, Sean and Aaron, Chuck and his dad, they sit down and they figure out, okay, what should we talk about tomorrow or Wednesday on Jive with Josh? And it's always very timely, really relevant. And that's what we're doing here. So once a month we go live. And make sure you subscribe to our YouTube page. We'll show you how to do that later on. But,
yeah, a lot of people, we talk very in general terms about when we give presentations about large topics, and they are pretty much evergreen. But there's things that happen in real time that people want knowledge on and what's going on. So this is our take to decipher the news and apply it towards retirees and what's going on in their life.
Yeah, cool. And which cameras are you looking at today?
The big one now.
Perfect. Excellent. Yeah. So just if you want to mark your calendars, which you are, I'm sure you have a pen and pencil ready. Here are upcoming shows. December 13th will be our Christmas special. We are going big on that show. Josh, I have some things planned.
As big as your Halloween necklace?
Bigger. Like right. Santa himself may make an appearance.
I wasn't thinking about the Christmas show. I was looking farther down there to the Valentine's Day show.
Well, that, I mean... Yeah, I was going to surprise you with a reservation at White Castle, which they do for Valentine's Day. But maybe we'll just do a Jive with Josh instead. I'll let you buy me coffee on that.
Deal.
Perfect. Deal. Excellent. Josh, what's your favorite holiday, buddy?
Dave, you and I have been friends for a long time. You should know my favorite holiday, and it's coming up next week. It is
Diwali.
Well, that was a couple days ago. It is Thanksgiving. And the reason I love Thanksgiving is because it is family. It is just getting together and hanging out. It's super low key, but there's lots of food. And I love the idea and the concept of being grateful, but I also love the food.
Yeah.
It's like comfort food over and over again. So that is it just makes me happy.
Yeah, we share that same love of Thanksgiving. Yeah. Last Thanksgiving I had COVID, and it was a total bummer. It took a lot out of us. Everyone in our household had it. So luckily we have an awesome family. Actually, Tatiana, they drove food out to our house, which was really cool.
That's really cool.
But this year we're not getting sick. So if you get me sick, man, you're in trouble.
Sorry, Carla.
But also, look, man, Thanksgiving kicks off like Christmas, in my opinion.
Yeah.
So that's just kind of why
it's a fun, happy time of the year.
It's the best time of the year, man.
But that being said, we have two things we want to share with our Jive with Josh listeners.
Yes, two.
First, Dave, what are we having for lunch today?
I'm trying to think. Maybe it's like that right there.
The Jive Turkey. Dave and I love to eat. For those of you that don't know us, this is our favorite crepe restaurant in downtown Elmhurst. Niall, who runs this, we've known for a long time. And during the month of November, he pretty much takes Thanksgiving dinner and puts it in a crepe. Yeah, I can see Clay loving Thanksgiving. But he takes Thanksgiving dinner and puts it in a crepe. And you and I spend the month of November trying to figure out how many times we can actually eat it.
Yeah, we have a goal.
Five is our goal. Five's our goal. We're at one in. We know we got one next week. We're doing two this week. So I think we have one the week after.
Yep.
We'll be okay.
We'll be okay.
But no, this is outstanding. So we love that.
Wait, really quick though, before we move on, did you see Michael Sinise says, "Fellas, what time do you want your Jive turkeys ready?" That's the best hire you've ever made. I told you, Michael Sinise, man, he's the man.
He's supposed to be helping with marketing, but
nope,
picking up Jive turkeys.
He's getting our Jive turkeys. Like Brian, he submitted a comment live, so he is dedicated to the cause. Sorry, continue.
But one other thing, and this one's specifically for you. I like to have people at our house. I like to entertain. And one of my favorite things is to make cocktails. We've talked about this. We released a video a year ago, and it was one of our largest viewed videos, which I find really funny.
Yeah.
And it was the Autumn Old-Fashioned.
No, the Bretl Autumn Old-Fashioned.
And it is a lot of fun. And you've promised us that, you actually have it linked here.
Yeah.
It's on our YouTube page, but as well, if you go to FSRwealth.com/BOF, standing for Bretl Old-Fashioned.
Right.
I like that.
Yep.
You will see this. You'll see the recipe. It's got maple syrup. It's got apple cider, cinnamon, nutmeg. It's outstanding. It's also really easy to make.
Really easy to make. So that link will bring you to the YouTube video. And then in the description of the YouTube video, there is a link that you can click on that will you can download the PDF recipe.
Dave.
Yeah.
Technical difficulties.
Oh, technical difficulties. So you guys may see this a lot. So when I hit that button, everything's muted, and that just means Josh needs a couple seconds to gather himself and cough. So if you see that lovely picture, that's not Josh, by the way. That's just some random dude I found online. But you may see that a lot throughout today's show.
I apologize for that.
That's all right.
Let's get into some of the meat of today here.
Well, wait a minute. You are forgetting.
Giving you the confidence. Well, I was going to go right here.
Oh, were you? Okay.
I was going to go right here.
It's Thanksgiving dinner.
It is. It looks almost as good as our Jive Turkeys. At FSR Wealth Strategies, and this was done almost exactly a year ago, we've talked about this. We rewrote our mission statement here in the office to be giving you the confidence to make retirement the best part of your life. And this is something that we actually hold very near and dear, and something we kind of get choked up about, because this is something that gives us purpose as we go on here. Retirement is this time that everyone looks forward to. Sometimes they get confused about it. Sometimes this is where life actually gets complicated, and what should be the best part of your life for some people can become confusing. And if we can take some of the confusion out so that people can make this truly the best part of your life, it becomes really, really sweet for our office to see that. And our whole team kind of really gets excited when we hear positive stories. So if you are a client watching this and you have a fun story of things you've done, we'd love to hear that, and if ways we made a difference. Ever since we've changed our mission statement, you've kind of seen the whole team come together around it. So, and I give you a lot of credit for that, for as much garbage as I give you.
Brian, did you hear that? He gave me credit for something. He likes me.
Well, Brian turned me onto the medicine ball. That may be better.
Cool. All right, ready to kick things
Let's
off?
Get going. Let's go into the current events. This is going to be a fun one here.
What about, about 11 minutes. So some people are going to hate us for taking so long, but let's go.
Well, I told you it was a slightly shorter presentation, so you talked more at the beginning.
Oh, blame me.
Let's go.
Wait.
Give me my slide here.
There we go.
So
Googly muggly.
Maybe Clay too. But the retirement, so this is our Own Your Retirement planning process, and all 5 of these parts are extremely important. You can't have one, you can't think about one without thinking about how the others are impacted. So your income plan is going to impact your investments will impact your income plan. Your taxes impact everything. Healthcare, these are your long-term care, your Medicare, all that stuff becomes highly impacted by all the other decisions. So I think you get the process. Today, we're going to focus here. And this is kind of where we spend a lot of time focusing on Java with Josh. It is the most, it's the part that moves the most. So a lot of Java with Josh is here on the investments and wealth protection section. So, but today I want to talk about something that's been in the news quite a bit recently. Oh man, my head's over my notes there. But that is the Federal Reserve. And Dave, I don't know if you're reading the same news I am and you're saying, man, the Federal Reserve has been in the news a lot recently. But the Federal Reserve has been in the news a lot in the financial world. Has it been in the news a lot in the
Sleepy Hollow and Bluey?
Yeah.
No, definitely not. No.
So, but what's been going on? They've been watching the Federal Reserve in their monthly meetings to find out if they're going to be raising interest rates. And since March of 2022, the Federal Reserve has raised rates 10 times for a total of 5.25%. Now, said like that, it may not mean much, but this is the quickest interest rate rise in history. It's not the biggest, but it's the quickest. And this impact has had a lot of things. Now, you have to know something. This rate raise is the overnight rate. So it's what banks will lend to each other at. So believe it or not, banks lend money to each other all the time overnight. And those banks, those are the most secure loans you can possibly have. So those are should be the lowest rates that we see. And then there should be an impact on the rest of the interest rate cycle. So down here, this blue line that you're seeing here, that I just drew a line under, that is what we call a normal yield curve. So the 3-month rate is lower than the 1-year rate, which is lower than the 30-year rate. The longer you go out, the higher the interest rates normally are. And that's because there's more risk with the longer term. Now, those Federal Reserve rates I was talking about are even farther over here. They're kind of like right there. Now, what happens is, as the Federal Reserve raises rates, all the other rates go along with it. Now, right now, we have something goofy. We have what we call an inverted yield curve. So our shorter term rates are actually higher than our longer term rates. Now this inversion has been coming up. If I've shown this slide on a few other Java with Joshes, this one's updated for October. It looks less inverted than the one we did in June did. So that's a good sign. But the other thing is it's still inverted. It's still high as it comes out there. Now, what does this mean to the investor? So why does this matter? First off, higher mortgages are a thing. So these interest rates impact how much you pay for mortgages. I bought my house a few years ago. I have a 3% 30-year fixed mortgage. A lot of people have that. If you were to get a new mortgage right now on good credit, a 30-year fixed mortgage might come in over at 7.5%, 8% for people. Now, if you're like our parents who bought houses in the 80s, they think it's no big deal because they were paying 16, 17%. But compared to what we've had in recent history, mortgage rates are way higher. That means the amount that you have to pay for a house becomes a lot more. On the contrary side to that, interest rates are higher on savings accounts and CDs and money markets. So the money you have sitting in banks is paying real interest. Tax returns this year, the interest line is going to be a real line. It's going to really impact people's tax returns. Don't be surprised if you have a lot of money in the bank, if you owe more in taxes this year than you have in many years past because you have higher interest earnings. Now, that's not a bad thing. It means you have more money coming in, but just be aware of that. But it also means that corporations have higher expenses. So a lot of corporations run debt on their balance sheets, and that debt is not like a 30-year fixed mortgage. It does fluctuate as time goes on here. And as we have higher interest rates, we're going to have corporations have higher expenses, which is going to mean less profits, which in theory should mean lower stock prices for the market as we go on here. And the last thing that this means, these higher rates mean, is that there's less money moving around. There's less quote-unquote deals out there. So a lot of these smaller or mid-sized companies, when you see growth inside of them, it's because somebody's buying them when they go from one to another. These private equity deals or things like that you see. And a lot of those are debt funded. They're debt financed. And these companies, when they saw these interest rates go up, they're like, oh, we'll just hold on to it for a while. And they don't need to do it. So we're not seeing some of these private equity deals that we've seen for the last decade as that's gone on. So that's what the higher interest rates have done. But why are they raising interest rates? This is an interesting one here. This is our inflation graph. Dave, technical difficulties?
He's back. He's back, everybody. I think he's back. That was a rough one.
I apologize. I talk for a living and I can't talk.
I hope that mute button works, guys, because if not, I'm sorry.
But inflation is something that when I graduated from college in 2003, up until pretty much the early 2020s, we didn't see much of it. It was hovering under 3%, under 2% for many years. It really wasn't a big deal. And then you see what's happened here. This is September of 2021. Inflation year over year comes in at 5.4% and really quickly increases to 9.1%. Now, if you remember, the first Federal Reserve interest rate rise was here in March of 2022. They kind of said before that inflation wasn't a real thing. They weren't ready to raise interest rates. But now they were going to raise rates in order to fight this inflation. And the reason they do that is a lot of what I told you before. They wanted it to be more painful for people to spend money. They wanted people to spend less so inflation comes down. Now, something you need to understand about inflation, this is not like when you see this black line going down like this is not the fact that prices are coming down. What this is that they're going up slower. The Federal Reserve and our government is okay with prices going up. They just don't want them going up at the same rate or at that high rate. So this is not, if you're driving down the road in a car, it's not the fact that you've hit the brake and you're actually slowing down. What's happening is you're just not accelerating as fast as you were before. So that's really what they're looking at.
Does this apply to Arby's raising the price again and the beef and cheddar?
Yeah, I mean, that goes into it.
Yeah.
You're going to see here, food is the blue section here. Yeah. So that's your Arby's beef and cheddars inside of there.
Okay,
so
good.
we've had some big increases.
Sure. Pig increases or big?
Big, yeah.
Okay, I thought it was a Freudian
I mean,
slip.
even our Jive Turkey's gone up in price, but it's still worth it.
Oh, it's worth double. Niall, I mean, no, don't charge double.
But looking at this, what we have to think about is where we're going into the future. And the Federal Reserve is watching this very closely. In fact, if you remember, the last time the Federal Reserve got together was, the last time they raised rates was earlier this year in July.
Wasn't it during one of our Job with Joshes they met?
They
had the audacity to.
They did, right in the middle of our Job with Joshes.
Yeah.
And in July, they pretty much said, hey, we still have more rates coming, but we may not be immediately. They were worried because these raising rates were actually causing some bank failures and things like that. So what happened is they said, hey, we're going to raise more rates later, but we're not going to for the next few months. We're going to watch inflation closely. And inflation has been coming down. It's been coming down. And in June, it was at 3%, July, 3.2. You can see here, August and September crept up a little bit to 3.7. And about a week and a half ago, the Federal Reserve met, and they came out and they said, we're going to hold rates, but we're probably, we'll see what we have to do in the future with inflation. And Jerome Powell, who's our Fed chairman, was what they call dovish, meaning he was kind of not saying rate increases were coming further. And the market responded very positively. The stock market went up because they like lower interest rates. But then last week, the other Fed chairmen, the regional Fed chairmen came out and they had to kind of counteract what he said. And they said, no, we think we're going to raise rates more. This inflation number isn't going to come out good. We're worried about it. But the Fed is very technical. And the fun thing about Java with Josh is we get to take the news from yesterday. They were expecting about a 3.3 to 3.4% inflation rate. It came in at 3.2. I mean, isn't that exciting?
Good job, guys.
But what that really means is that the rates did not go up as much. So that is good news for the Federal Reserve not raising rates. And what you saw from that was that the market kind of skyrocketed yesterday and Monday after they got that news. So this is good for us because what that means is you don't have to move me here.
Nope. I'm already there.
I'm not going to talk about that. But we hopefully will be done seeing interest rate rises as long as we can maintain that level of inflation. So I want to show this here, but this is funny. This is our S&P 500, and what you're going to see here, this is the last 5 days on the left, and this is Monday here. Monday, we had a huge increase. That was when those inflation numbers came out, and the whole reason behind that was because of the fact that I can't say the whole reason behind that. Compliance is sitting here. They'll get mad at me. A good chunk of the reason behind that was the fact that those numbers were so good that they weren't going to see future Fed increases in rates. So, make sense?
No.
Okay, well, good. Glad I could add clarity to that. Now, let's talk about where we think it's going here. With lower interest rates, corporate earnings are still going really strong right now. We actually see a good positive fourth quarter. We see a good start to next year. But 2023 has been the stereotypical example of why you can't time the market. And if we go back to the graph here, Dave, I want to show you this to you. The graph on the right is year to date here. And you're going to see that year to date, this was taken a snapshot this morning. The S&P 500 is up 17.94%. So we started down here, we went up here to where we were at 17.94% increase. But the vast majority of those increases can be attributed to 9 days. Oh, now my head is in the way. I wrote days behind me there.
Wait, watch this.
Look at that.
Magic.
So the vast majority of those increases can be attributed to 9 days. So that means if you decided that you were going to be out of the market or in the market, or you missed just a few of those days, you didn't get nearly the increase that the rest of the S&P 500
and that's what you mean when you say don't time the market.
Don't time the market. Yeah. In fact, you're going to lead me to a quote from one of my favorite investors, Mr. Warren Buffett.
Oh, I thought you were Elf.
Not Elf.
No.
Or Alf. No. As he says, only an idiot tries to time the market. In fact, the advice we're going to give this month, which is different than we've given the last few months, is time in the market beats timing the market. I think it's very timely for this. Crystal balls are as good as anybody else's crystal ball. but the market does work, and the S&P 500 this year is kind of another one of those proofs that this is the time that just good, solid, fundamental investing pays off again and again and again, and it's kind of fun to see that all come to fruition there.
The only thing I was focusing on is how pixelated that last slide was, because you didn't have me do it for you.
That is true.
Yeah.
I was very quick in that, and Dave, technical difficulties.
We're back.
That's embarrassing.
Yeah, it's gonna happen, Josh. It's better than canceling Job with Josh.
It is true.
Millions of Americans would have been heartbroken.
That being said, Dave,
yeah, sure.
We were going to ask people, if you are enjoying this, if you could like the video. Dave, good picture you took of me there, dude. Liking the video helps people see this current episode, and if you want to see future ones, I hope you subscribe to our channel there.
I told you I wanted to say that here. All right. The truth is, yes, when you click on that thumbs up video, other retirees and student retirees, YouTube will be like, oh, wait a minute, I should show this to more people. So it is important to like our videos. We really appreciate that. And then subscribe. What?
The picture up there is awful.
Blame YouTube. I'll call Google later. And then you click on that subscribe button there. And that way, when you log into YouTube, there'll be a little red dot next to our profile, and you'll know, like, oh, Josh has got a new video. I got to stop what I'm doing and watch it. But that would be great. Thank you very much.
Dave.
I mean, come on now.
Any questions come in as we're sitting here today?
Yeah, I thought you wanted me to summarize what I learned today. Or do you want to do questions first? Let's do Q&A first. Okay. No, we did have a Pat Brogan. Do you know?
Oh, I do know Pat. Yeah.
And Pat says, let me post. Don't forget to tip your waitress. I'm assuming this is in reference to Michael being the waitress getting our Jive Turkey. So kudos, Pat Brogan.
Everyone loves a Michael.
Oh, Michael, we love you. Cool. So other than that, it's just a bunch of shenanigans from Clayton and Michael and other folks that we're not going to post this on the live Java with Josh show. So no live Q&A. You still have a few minutes. If you want to pump something into YouTube or Facebook, do it now. But Josh, I did get a few emails earlier in the week from folks wanting me to ask questions.
Sure,
live.
yeah.
So this comes from Scott K. And Scott is asking, with money markets earning a guaranteed 5%, why would I put any money in the market?
Ooh, this is a good common question we get. Banks right now are paying higher than they've paid in the last 15 to 20 years. This is a great time to be a retiree because for your safe and secure money, you can lock up some really nice short-term rates. The problem is we have what we call reinvestment risk, and we can talk about that again. But when rates come down, which they do come down, that interest rate just goes away. Poof, it's gone. And it's almost too late then to get back into the market. So I do think it's a time, if you like this rate, if you can lock it up for 3 or 4 years, that's not a bad thing to do with money that you're not going to need for that time period, because you can take that shorter term rate and make it more beneficial over the long term. And we'd be happy to talk about that. But the other thing is just good, solid asset allocation. And right now is a time that if we think equities are going to do well, the S&P 500 is a great example of that this year. It's not a guaranteed 5%, but 17.94 year to date is pretty darn good. There is more risk involved in it, but it's still there. And the problem is, if we wouldn't have been in it, we didn't get it. And so we can't. It's kind of that don't timing the market. We want to have a good diversification and a good solid asset allocation instead.
Yeah. Cool. Let me just jot this down. I'm keeping a list of T-shirts I want to make and offer to folks. But time in the market, blah, 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 chicken scratch. Cool. Okay. Question number 2 comes from Debbie M. Debsters.
I don't know Debbie.
Oh, well.
I can't think of it actually, but maybe I do.
All right. Debbie M. would like to know, can I wait until I do my taxes to do a Roth conversion?
Ooh, this is a common question we get. So people are aware of the fact that you can make Roth and regular IRA contributions all the way up until April 15th. But conversions are something different. Conversions are when you go from a traditional IRA to a Roth IRA, and those have to be done by the end of the year. And it'd be nice if we didn't, because we could know your tax situation ahead of time, but we have to do them by the end of the year. So that's why with a lot of our clients right now, almost all of them, we are almost doing a mock tax return for them to see if we want to add income and do Roth conversions, if this is a good year for that.
Cool. Oh, we just had someone post one live from Facebook. Oh, cool. Steve Novosad.
Steve, yeah, Steve? I know Steve well.
All right, Steve asks, I keep reading that current corporate earnings and inflation are tied to price gouging, downsizing product, and just plain corporate greed. Yeah, hear. What are your thoughts, Joshua Edward Bretl?
I don't think you can argue with corporate greed. I think it's there no matter what. I think there's good corporations and bad corporations, the same as there are good people and bad people. I don't think you can rule out the fact that some of the inflation is that way. But the way they measure it and the way it's been consistent year over year, I don't think those numbers tie into the corporate greed aspect to it. I think there's a lot of questioning as to how the government does measure inflation and goes through it. But Steve, I'll be happy to talk to you more about that. In fact, if you want to send me a couple of those articles, I'd be happy to read them and tell you my thoughts on them. But I have not seen that as much, but I'm happy to talk to you about that.
Cool. And finally, in response to Pat Brogan's, Michael says, 20% tip, please. Thank you very much. So, Michael, no tip for you. You get to keep your job.
No.
All right. So,
now I'm going to pick up my own Jive Turkey.
Yeah, oh, boy. So, can I summarize this?
Yeah. I always like it. It proves to me that you're listening to me.
Yeah. So, 2023 has been a good year, right? But most of it is attributed to 9 good days, right? Did I get the number right?
You did. It was a 9. Yeah.
Yeah, 9. And so the slogan for the T-shirt is, "Your time in the market is more important than timing the market." Did I get that right?
Yeah.
So did that a good summary, Brian? Thanks, man. Why doesn't he talk? Is he afraid to talk?
I think he is a little afraid to talk.
Yeah. Cool. So that was the summary of my summary of today's show.
Hey, that works. I mean, you just took Warren Buffett and summarized him, and that was great. So you and Warren Buffett, 2 epic investors out there.
Epic. One more time, if you would please like this video, subscribe. That would be amazing. So Josh, let's kind of wrap this up here. I got the closing music going here.
I said today this was going to be a shorter episode, and here we are again over half an hour, so I apologize for that.
Well, we had to pause 48 times for you to sneeze and cough.
It felt that way, for sure.
I think that was the way to go. But hey, happy Thanksgiving, everybody. We're going to see some of you coming up here shortly.
If you're local, get a Jive Turkey.
Yes,
no matter where you are, try the Bretl Old-Fashioned.
Yes, and tell Niall that we sent you when you get one. So with that, gobble, gobble.
Gobble, gobble.
All right.